There is a pandemic in the world and the markets are crashing, and we want to learn how to invest. So spend the next few minutes with me and I'll teach you a very simple strategy, the Newton cycle strategy, so you can invest for the long term. Let me give you the highlights in the next 1 minute so you know whether it's worth your time. One, we won't be picking stocks. We are only investing in the index, so it's easy to do and very safe because you're not investing in a particular company but a basket of companies. Number two, anyone can start with even 1000 rupees. आप 1000 के साथ कर सकते हो, 500 के साथ कर सकते हो, कुछ हजार के साथ कर सकते हो, काफ़ी सेफ चीज़ है. थर्ड, इट इज़ रूल बेस्ड. ये रूल बेस्ड है, आपको मेरे पास वापस आने की जरूरत नहीं है. यू डोंट नीड टू कम बैक टू मी. वंस यू लर्न दिस यू कैन डू इट ऑन योर ओन. एक बार आप खुद सीख लिए, आप खुद ही कर सकते हो. बेसिकली आइडिया ये है. हियर्स द आइडिया. वी वांट टू इन्वेस्ट 100% इन इक्विटी व्हेन मार्केट्स आर इन द डाउन साइकिल. हमको 100% इक्विटी में इन्वेस्ट करना है जब मार्केट्स डाउन साइकिल में है, और जब अप साइकिल के एकदम उच्च चोटी पर है, when it's at the highest point in the cycle, you want to take out money from equity. So one thing you should know, every 6 to 7 years the market goes through a cycle, right? This cycle lasts 6 to 7 years and it goes between extreme ends of the valuation. Let's see an example. I have Nifty Junior open here, and as we know, the all famous crash साइकिल क्या होता है यही आपको दिखेगा. ये देखिए 2003 से शू करके हम कितने पे थे, 1200 से 12000 पहुंच गए, 10 गुना. सो वी वेंट फ्रॉम a 1200, a paltry 1200, all the way to 12,000. That's a 10x growth, and this is called a bloody good bull market. And this is your up cycle, right? So this is when the markets are in an up cycle. Then उसके बाद 13,000 से लेकर हम पहुंच गए ये लो पे 3,600. That's a big fall. That's a factor of 4 that we are falling with. Now, this is of course the bear market. Now, usually this cycle lasts about 6 years. So if you see here 2003 all the way to 2009, roughly that's about 6 years. And then another year for the recovery, that's the 7th year. What you need to do, guys, is you need to invest for up to 2 or 3 cycles. I know it sounds like a long time. Who's going to invest for 12, 18 years? But let me tell you, it's worth it. 1 lakh rupees with the strategy I'm going to teach you, that 1 lakh turned to 50 lakhs from 2001 all the way to 2017. And if you include 2020, by now it would have grown to 62 lakhs. Now I'm assuming as the market grew, you also became richer in this 19-year-long journey, and you started investing 1 lakh each. Well, if you change these numbers to say 10 lakhs every time the investment opportunity showed, then this would be 23 crores. Let me say that again. If you invested 10 lakhs instead of 20,000, then this would be 23 crores. And in another 6-7 years, God knows where that number is going to be. So, you want to learn the strategy? Let's learn it. Very simple. First, we're going to use the Nifty PE ratio. So, is this the best ratio out there? Of course not. But it is something that helps you. Now remember, we're not trying to predict the top or bottom. Nobody can do that. But what you can do is you can say, okay, markets are undervalued, I'm going to invest. Oh, markets are overvalued, I'm going to exit. Now this is very difficult to do, but very easily explainable. So this blue line you see here, ये ऊपर नीचे blue line जो जा रहा है, जब ये 25 या 25 के ऊपर जाता है, आपको मार्केट से निकलना है. So when this is at 25 or above, you have to exit the market. अब उस पैसे का क्या करेंगे? Now what will you do with that money if you exit? Well, basically you can put it into debt funds, fixed income funds. We have an entire course around that. Or when the markets are at 15 or slightly below 15, you can invest in equity. And equity means what stock will you pick? Question mark. Well, the answer is you won't pick a stock. Do not pick stocks. You pick the index. You can invest in the Nifty 50 Next Index or the Nifty 50 Index. I would recommend the Nifty 50 Next Index. You can find an index fund on any of the online mutual fund platforms. All you need to do is type index fund Nifty Next 50 or you can buy the Sensex 30, or you can buy the Nifty 50 index. You pick. But Nifty 50 next is the most aggressive. I think it's a good pick. And of course, there's patience for this. So that's it. When the market comes to 25 PE, what do? You exit. When the market comes to 15, what do? You enter equity. So let's see some real examples. As you can see, the markets here right before they rose at 2003. So let's see what happened in 2003. So around this area, the markets were trading at 11.6, actually a little lower. They were trading almost 10.84. And from there, it went to a high right here of 21.5, which means we would not have exited in this scenario. We would have held on to our equity and probably added more over here and held all the way till it went overvalued here at 25. Now, at this area 25, which is 2008, let's look at the chart. Imagine you're holding this entire period. There is no exit whatsoever. You're exiting, you're holding till here. And in this area is where you exit. Not bad. It's not far from the top, I would think. The markets went up another 10, 11% maybe, and then they just crashed. Now, this is the tough part. You exit all your index funds, everything from here, and you put it in debt, and you're sitting and you're waiting for Nifty PE. Say it out loud, 15, that's right. So what happened after that? 15 came here. That's around October roughly. So let's say October 2000, where is October? There it is. Damn, isn't that scary? So look at that October, but you would have entered here actually. So you entered at, let's say 5,500 for example, and the market went all the way down to 3,600, which means you lost a huge double-digit figure. So when you open your portfolio, you would have lost money, and 1, 2, 3, 4, 5, 6 months, guys, you would be losing money on your portfolio. Not losing, but you would see a paper loss there. And you have to be okay with that, because no one knows how much the market will fall. We just know it's cheap and people are panicking. That's it. And once you invest, here is the magic. You hold on to it, you do nothing. That's how money is made, doing nothing. And you hold on to it, and as you can see, the market goes up. Do you buy more? Don't decide by looking at the chart. Look at your PE and say, hey, has the market fallen at 15? And it happened again at around this area, and we would have bought again in September. We would have bought again and the market went up. Now, what I've done is I've actually created a Excel sheet which has all the buys and sells. Now remember, these are approximations. I've used different numbers, but the point is that we can all try to follow investing methodology. Now in this, what I've done is every time the market reached 15, we invested 20,000 rupees. Okay, and this happened multiple times, and we kept investing. 2001, 2, 5, 5, 6, and then the market was overvalued and we exited, and then entry again and then exit. So let's look at these numbers. We first invested in 1080, then 1500, then 4200, then 4750, then 5200, then 11,500 is the exit. Isn't that amazing? Then we entered again at 6800, then 4300, and then sold again at 12,000. Then bought again at 10,500 and finally exited at 28,800 in 2017, because that's when we hit 15, which means market actually went higher than that, and we were sitting with debt, and we're still sitting with debt, and your portfolio now would be around 62 lakhs, assuming your debt funds gave you 9%. So feel free to change these numbers. These growth estimates, right, won't happen in the future. So don't assume you'll make 62 times in the next 20 years as well. It could be you could make 100 times. It's possible you make only 40 times. We don't know. But what you do know, and what power you do have now, is that just with this simple valuation technique, ignoring the news, ignoring people, ignoring everything, you know when markets are cheap or when markets are relatively expensive. All I wanted to say in the end was that currently markets are almost at 19.7 and they were at 18.6 just a few days ago. 15 is not far. Make the right decisions for yourself, for your future, because if you can invest now, this has not happened 15 has happened only 1, 2, 3, 4, or 5 times in the last 20 years. And it's gonna happen this time. Don't blow it. All the best, stay safe, and wash your damn hands.